Is gold going to hit 3,600 this summer? I'm making this video. My name is Drew Yurasek. I'm one of the founders and managing partner at The Complete Investor, and I sit on the advisory board of Wealth IQ Group. And I'm making this video for my clients, my gold clients of now going on almost 20 years. And gold's obviously had this meteoric rise, especially in the last year. Everyone's buying gold. Big banks are buying gold. Big funds are buying, and we're talking real gold, not paper gold, right? And so the gold bug has been out, finished the year strong. We're even still up this year, but obviously had these recent pullbacks. And all of a sudden, somebody, an unknown trader, does a huge bet on gold going down, and especially by this summer. Now, I'm going to break down this trade. What does it mean for people that own real gold? What does this mean for people that don't own gold? And why am I doing this video? Because, man, I think this is a beautiful trade. If you don't trade options or don't know about options, man, you need to watch this video. I'm going to break down the trade. It's a trade using options, specifically on GLD, which is not real gold. It's paper gold, and I'll go over the differences. And it's, in my opinion, playing off oil and the oil trade. I've done videos on this specific, topic, how gold rarely trades against oil, right? Because they're both inflationary commodities, right? And so normally they don't have this kind of opposing moves, right? And you've been watching, and I've done videos on this. It's rare that this has happened, but it makes sense because the Strait of Hormuz is closed. We shut off almost 20% of the global oil supply with this, conflict in the Middle East. And so gold, as oil goes up, and you'll see it one for one almost, right? Gold goes up, or oil goes up, gold goes down, vice versa, right? So I'm going to go over that a little bit as well. But before I go into those details, for those that do not know me, don't know my company, I am Drew Yurasek, again, one of the founders and managing partners at The Complete Investor, at thecompleteinvestor.net. We specialize in protecting people's retirement accounts with real physical precious metals, real gold, real silver. Most people don't know you can actually own real gold in your retirement account. It's a tax-free, penalty-free move. You lose no value. You're just moving from paper to physical assets. And why might you want to do that? Well, we're nearing $40 trillion in debt as a country. And physical precious metals aren't tied to our debt. And every time we borrow money, I'm sorry to say this, every time our country borrows money, the chance of default goes up, not down. And also, physical precious metals in a retirement account is not taxed the same as paper assets. Most people don't know that. Physical gold, physical silver is not taxed the same as stocks, bonds, mutual funds, annuities, or even cryptocurrency. And I know most people rather spend less in taxes than more in taxes in retirement. I'm pretty sure. And also, physical precious metals, pretty cool, is 100% insured in your retirement account with all risk coverage. And your current investments, you can look at the bottom of any statement page in your IRA or your traditional brokerage account. It's going to say these words at the bottom of every statement page. These investments have no insurance, can lose 100% of their value. Physical precious metals, real gold, real silver in your retirement account is 100% insured. Now, let's break down this trade and why I think it's beautiful. Okay, so here's the exact trade. And by the way, I think it's my opinion, Stanley Druckenmiller. Nobody knows. It's a secret trader. It might get exposed somewhere. So if someone finds out, put in the comments of this video who you think it is. But here's the trade. The trader sold 4,000 of the $450 strike prices of GLD expiring in July. So they think this trade's going to happen by July. So they're taking in money. This is a very dangerous, naked position that I would never recommend anyone do. And it's about $130, $140 million of exposure. So now it is, I don't want to say covered, but it is got a another trade that goes along with this that has the upside potential, but that downside risk is huge. I'm guessing someone would need at least $35 to $60 million to do this trade. So it's got to be someone with a lot of money. Anyway, so they bought 8,000 of the 360 strike puts expiring the same day in July, right? And so what they got is $3.1 million in credit. I should use my drawing tool here. So they got $3.1 million in credit for selling the 450 strike, okay? And then they paid $2 million to buy the puts of the 360 strikes, okay? So what they're betting is that gold stay below GLD specifically, and I'm going to go over the difference here. This is very important because there's a huge difference between paper gold, GLD, the ETF, and real gold, and I'll go over that in a second. And so they're saying it's not going to go higher than this. It's going to stay below 450 by July. And I'm going to tell you why I think this is beautiful. I think this is a beautiful trade. I wouldn't do it exactly like this, but because there's infinite upside risk if it goes above 450. And then it's saying that 360, right, price on GLD, anything below that, they really start making lots of money. And if it closes anywhere between there, they keep that $1.1 million, right? So anywhere between here, they keep that premium, that $1.1 million. Okay, 1.1 million. And why do I think this is beautiful? All right, and again, I got to go over the differences of GLD for you as well, because this is not real gold, number one, and not the price of real gold. So the reason why I think this is beautiful, and I went over this point in my videos about the gold and oil trade that came up when we started the conflict in Iran. And you can see it, when Epic Fury started, it's almost 1-for-1. Here's crude oil, and you can almost overlay this on top of gold futures, okay? So if you just take year to date and look at when it started too, they started on the same day, and you overlay gold futures, every time gold goes down or oil goes down, gold spikes. Every time oil spikes, gold goes down, right? And you can see it. And it's becoming less and less violent, but this normally does not happen, right? As gold goes up, oil typically goes up. They're both inflationary commodities, right? They're both supply and demand commodities that we don't have infinite supply of, and we have increased need of over time, right? Oil because we use it in day-to-day operations, but gold because we use it to secure our finances when we're trading and using what's called fiat currencies. And again, those are longer conversations, but at the end of the day, they normally don't have that inverse relationship. But this makes sense because we just cut off 20% of the global supply of oil. So this shock, right, is providing what's called a short-term trade, right? So a commodities trade in gold, right, would move over to oil if it sees opportunity to make a lot of money in oil futures, right? And that's what this play is. And again, you can see it almost 1-for-1. But what's happening, and I've been saying this, I've been on shows before with, options traders, and I do trade options. I actually got my start at the Chicago Board of Trade and the Chicago Board Options Exchange, working for one of the top options traders in the world, famous for taking Amazon.com public, okay? And I love options. I still trade options to this day, a lot differently than most people, because most of my positions are deeply rooted in physical assets like real gold, real silver, okay? But I still use options to this day, and I actually have commodities opportunities in companies I own in stock, and I do options trade on them, and one of them is an oil company. Okay, so I've been playing this oil trade for over a year now, but especially this year as this conflict has happened. I've been selling calls all day long and increasing my positions on those calls using my base stock as the oil companies I own. So that being said, and why I've been telling people I love this market is, let me go to this. This is probably a better screen here. The VIX, the volatility index. As the volatility index spikes, options premiums go up. And it makes these trades so lucrative, right? When options are expensive, you get a lot of premium when you sell them, right? And these oil trades have been kind of artificially, I don't want to say artificially, but they've been really accelerating or embellishing, I should say, options values, right? So when all of a sudden Trump says we're going to go in and we're going to bomb the crap out of the country, right? Oil spikes because we know that 20% of the oil production in the world gets cut off in its distribution channels through the Strait of Hormuz, right? And we also know that that's going to affect the value of companies and their profitability, and all these costs are going to go through the roof. So everyone moves into oil, right? And options, because options premiums go up, especially when the volatility index spikes, right? So look what the gentleman did. And again, I think it's probably Stanley Druckenmiller, and that's just my personal opinion. He probably did this trade when gold recently jumped up over 4,700 and almost near 4,800, right? Took advantage of the high premiums on the calls, sold those calls, took in a bunch of money, and then bought the puts on the downside. And the reason why I love this trade is because he's not saying gold is going to 3,600, okay? And again, I'm going to tell you before you leave here and before I'm done with this presentation, GLD is not real gold, and you need to know this if you're buying it for that reason, and the differences and the ratios that you need to look at when looking at this trade specifically. But he's saying that gold is probably not going to go over 4,500, and really 4,800 is the number. He's saying we're probably going to stay below 4,800, okay? And the chance of it testing, right, our lower levels, which we tested a little bit ago, which is that $4,300, $4,400 level, I make $1.1 million for it to stay below that $4,800 level and above the $4,300 level, okay? And he's doing it during the summer. And gold, and you can do your own research, gold usually takes a break from June to August. It doesn't do a lot. Great time to get in to gold, physical gold, because again, it stays stable a little bit and then it tends to jump up toward the end of the year. Okay. And again, you can do your own research on this, look at your own charts on that. But gold usually takes a break during the summer. Actually, that's when I usually sell the most amount of gold because again, it's stable for people to get in, especially people that are looking longer term. And again, why might you want to look at gold, physical gold? This is the biggest reason right here. We are currently at almost $40 trillion in debt. There's analysts calling for us to be near $100 trillion in debt by 2030. Okay, that's more than double where we're at. And gold, and you can look at this over time, gold goes up with our debt. That's just a fact of the matter. As we debase the value of our currency and move farther and farther away from the real value of money, right? Based on our ability to pay, because it's not based on gold anymore, gold becomes more valuable. Well, wait a minute. If we more than double our debt in the next 4 years, doesn't it make sense that gold more than doubles in value? And you don't have to listen to me. Jamie Dimon, CEO of JP Morgan Chase, is calling for $10,000 an ounce gold by 2030. Ed Yardeni of Yardeni Research is calling for $10,000 an ounce gold by 2030. Again, based on our debt alone, right? Which could, again, more than double by 2030, just based on the path we're on right now. There's some people saying higher than that, but I'm conservative. So summertime, just mental note, great time to buy gold before it goes to the next levels. Okay. Now, that being said, GLD is not gold. Okay, so let's go to GLD. So the price of gold right now, and this is the gold contract, futures contract expiring in June, 45.65. You can see it live right now, 45.65. If it was 1-for-1 real gold, and I'm just going back here to my GLD. Okay, this is a GLD chart. Remember 45.51. Sorry for the delay. Let me just put in GLD. GLD would be 455 and 10 cents, right? It's a ratio of 1/10, right? What most people feel is 1/10 the value of gold. So GLD should be, and because I'm broadcasting, it's delayed. I can see it's frozen here. It wants to go. I can see it wants to go. But GLD is about 415 right now. 417. So here it is, 416.66. Well, wait a minute. Gold price is 4,565, right? So why is GLD 4,000 or 416 if it's 1/10? Because it's not 1-for-1 gold. It never has been. Now they do buy gold with the money that they get in for their shares, but it's number one, not 1-for-1. And here, I just did a chat GPT on this. They pay fund managers a commission to sell their products inside their funds, right? And investments. And they also, I put this up on ChatGPT just so it's not only not exactly 1/10, right? Because if it was real gold, it'd be at least the ratio. But the shares, you don't get 1/10 share. They just use that as a reference point. And they have to sell 0.4% of their real gold annually. So thereby, every year, each share slowly becomes less valuable. Meaning it's got less gold in each share. Representative. Now you also have to look this up. If you think you're getting real gold, there's no liquidation event where you would get real gold for your shares. As a matter of fact, when you buy GLD, you sign off on counterparty risk where they say, we don't have to pay you anything if there's a liquidation event. So if you're using GLD to track gold, do some options trades, cool, but it is not real gold. If you want true protection, in my opinion, buy real gold, right? It's 100% insured in your retirement account if you're buying with your retirement funds. Again, you can take any money that you have in a qualifying 401k or IRA, move it tax-free, penalty-free into gold. Not only is it 100% insured with all risk coverage, it's not taxed the same. And if you don't have IRA money to buy gold with, you have cash to buy gold with, in my opinion, I still do not know any company that delivers gold faster, safer, more effectively than us. Gold in your hands in 1 to 2 days. I'm hearing people quote up to 8 weeks to get your gold if you're buying physical precious metals. 1 to 2 days in your hands. Fully insured. And you can also, real cool feature about real gold, you can actually buy gold coins, real gold coins, that are deemed non-reportable by the IRS. Whoa. How do you do that? Well, there's actually a definition of non-reportable coins in the IRS code under 1099B guidelines. You can actually own coins that you do not have to report to anybody while you own them. And me as a dealer, a licensed dealer, I don't have to tell anybody you bought them from me. So you can actually own a physical precious metal, a physical asset that nobody has to know you have. It's the last safe haven of privacy and anonymity, in my opinion, because everyone knows everything you have, right? Everyone knows that you own a house, right? If you have a stock, you can buy leads, financial leads, where people know how much investment assets you have, what stocks you actually own, right? So you can't even own a stock without everyone knowing you have it. Again, you can't even own a house without everyone knowing you have it. Heck, you can't even own cryptocurrency anymore without everybody knowing you have it. So it's nice to have a physical asset that nobody has to know you have. And also, with cybersecurity threats increasing, not decreasing, guess what? You can't hack a physical gold coin. Now, if you want to find out more, you can reach me. Just go to my main site, thecompleteinvestor.net. At the bottom of any of the pages, but the main page here, thecompleteinvestor.net, you can fill out your name, your number, give me a call. I can talk to you frankly about anything you want. Again, I love options. I love this options trade. I specialize in protecting people's retirement account with real physical assets like gold, right, silver. But I can talk to you about options trading. I used to work at the Chicago Board of Trade. Worked for two of the top traders, in my opinion, in the world. Top S&P futures trader, top options trader in the CBOE. And again, I have background in physical precious metals now going on 20 years. So want to have a candid conversation with me, thecompleteinvestor.net, fill out the form. I'd love to talk to you personally. If you're a client of mine, I'm doing this really for you so you understand, hey, is someone out there betting gold's going to go down to 3,600, which wouldn't be 3,600, by the way. It'd be like, I don't know, 38 or 4,000 based on the numbers that the ratios that GLD trades at. But no, in my opinion, he's just saying, hey, I think gold's going to stay below 4,800 for the summer. I mean, that's at the end of the day, he makes $1.1 million. Gold typically takes a break during summer anyway. So one of the times I sell most gold is during the summer because of that reason, because it stays still for people, right? It's not going on a rapid rise like it has been for the last few years. So great time to get into gold. Please reach out to me if you have any questions. Have a great day.